Good morning, Chairman Rangel, Ranking Member Camp, and distinguished members of the Ways and Means Committee. My name is Elise Gould, and I'm a health economist and Director of Health Policy Research at the Economic Policy Institute. I appreciate the opportunity to appear before you today to share my views. Employer-sponsored insurance, I will call it ESI from here on out, provides insurance for the majority of under 65 Americans. ESI, particularly among large firms, works because it pools risks, has low administrative costs, and offers a stable source of coverage for a large share of the population. Many of these people enjoy the benefits they receive and would like to keep them. However, we have seen a weakening in ESI over the last several years, and it is important to examine strategies, and I commend Chairman Rangel in holding a hearing to examine strategies to strengthen ESI and find ways to provide this high-value coverage to more Americans. The employer-sponsored health insurance industry in the United States did not flourish until the middle of the 20th century. During World War II, employers offered health benefits as a way to attract workers when the National War Labor Board froze wages. In 1954, Congress amended the Internal Revenue Code to clarify and expand a 1943 administrative tax ruling that granted tax-exempt status to employers' contributions for their employees' group medical and hospitalization premiums. Excluding premium contributions from taxable income made $1 worth of health insurance less expensive to provide than $1 worth of wages. In general, this tax exemption, effectively a government subsidy, reduced after-tax insurance premiums enough to encourage even the healthiest employees to enroll. In that way, sustainable risk pools were formed and group policies became more attractive to insurance companies. Over the latter half of the 20th century, employer-sponsored health insurance became increasingly popular. Workers have grown to rely on employers to provide insurance, and employers have used it as a tool to attract and retain the best workers and improve the health of their workforce. Employment-based coverage remains the most prominent form of health insurance today. About 63% of under 65 population has insurance either through their own or a family member's employer. Over 80% of the college-educated and 80% of those in the top half of the income distribution have ESI coverage. In fact, if you break the non-elderly population into fifths by household income, we would see that those in the top income fifth are nearly 4 times more likely to have coverage than those in the bottom fifth. So we see that employer-sponsored health insurance is working well for tens of millions of American workers and their families. That said, the problem remains that many folks are left out or are ill-served by the employer-sponsored system. Further, while ESI remained the dominant form of health coverage through the 2000s, the share of people covered by ESI declined 5 percentage points since 2000. This erosion or unraveling has been occurring even during the economic recovery. During an expansionary period, we would have expected coverage to increase as employment grew, but it simply did not. High and rising health costs are mostly to blame. Average premiums for an employer-sponsored family plan have risen nearly 120% since 1999. 3.5 times faster than workers' earnings, and more than 4 times faster than general inflation. Small business owners and their workforce face particular challenges in obtaining ESI. The coverage rates in firms with fewer than 10 workers is less than half that of workers in firms with more than 100 workers. Half of all the uninsured are employed by a business with fewer than 100 workers, and 36% work in firms with fewer than 25 employees. Small firms that do offer health insurance face high costs, paying on average 18% more than larger firms for identical policies. This is due to higher and more variable health risks, a lack of competition amongst insurers, and greater administrative expenses. I know in 2007 at the small firm where I work, with less than 30 days' notice, our insurer raised rates by 27%, forcing us to switch carriers at the last minute, which is not easy in the limited marketplace. It is these high and unpredictable costs that have made it increasingly difficult for small firms to provide the insurance they want to offer their workers. So what does the future hold? The current economic downturn and forecasts of high unemployment indicate continued erosion of employer-sponsored insurance in the near future. I estimate that by the end of 2009, nearly 50 million non-elderly will be uninsured. The link between insurance and work has been a tradition in this country. ESI, particularly in large group markets, can effectively pool risk, lower administrative costs, and maintain stability. But we must recognize its limitations. There has to be a way for the non-workers, part-time workers, and even those full-time workers have been closed out of the current system to find affordable coverage. Private market reforms such as community rating and guaranteed issue can improve competition between insurance companies by ensuring that this competition takes place on the grounds of efficiency and not on companies' ability to sort the population for the lowest health risks. The best way to ensure that coverage is universally made available to those who do not have good ESI is to construct a national insurance exchange that includes a public health insurance option. A public health insurance option is an essential part of this exchange. While giving Americans more choices for coverage, it also has the added advantage of increasing competition to already limited markets, reducing costs and cost growth, driving quality advancement and innovation, and serving as a benchmark for the insurance market. As we move forward towards meaningful reform, we must be wary of quick fixes to our insurance system. One such fix involves taxing health benefits. Research shows that taxing high-priced health coverage will heavily burden two groups: workers in small firms and workers in employer pools with higher health risks, such as those with a high percentage of older workers. Small businesses are paying high premiums for the insurance they provide to their employees, not because the plans are especially lavish, but because they have high administrative costs and include too few employees to constitute the broader risk pool that would qualify them for lower premiums. Capping the tax exclusion exacerbates the problems small firms already have. It would encourage the young and healthy to opt out of these pools, and upon their exit, premiums would likely rise for those remaining. Instead, we should build on what works well in today's American healthcare system, ESI for the bulk of the workforce, as well as extremely popular programs like Medicare. Thank you, and I am more than happy to answer any questions you may have.